Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with our stock market wrap-up after the April 30th session for you to use. I guess tomorrow's May 1st, right? January, February, March. Yep, that's right. Okay, cool. I was doing the knuckle thing right there, by the way. First knuckles, January, in between February, then March. That's how I know how to do it, so sorry. Anyway, let's go and start with the NASDAQ today. I want to show you that the NASDAQ continues to maintain the uptrend that it's in. I'm going to go ahead and basically like connect it along there. However, if you're like, oh, I don't like the way that uptrend looks, then here's a better uptrend for you that I'm actually looking at right now. I'm using this one as it connects more lows. However, even if the NASDAQ does break this uptrend line, I still won't be worried. Why? Because the recent pattern of higher volume on the up days, the big tall green bars, except for this one bad day, which was quickly erased the very next day, as the intraday closed at 1643, which was higher than the 1641 open the day before. But recently there's been a lot of tall big green bars. And I'm starting to see that here the same thing that I heard back in 2003. You're buying stocks now with it up here. You're buying stocks now with it up here. Well, here, as you can see on 2003, I'm showing you an uptrend that lasted very long time in between this channel here. And then it finally stopped moving up at the end of 2004. Well, if we've got the same thing going here, I mean, we've got a ways to go. You know, so that D line wasn't straight enough, so let's use this one. You can see the channel that it's in as it moves higher. As long as it keeps on in that channel, I guess if you're a short-termer, you could sell the resistance and buy the support. Me, I don't play market like that. I like to go for the big home runs while holding them and just kind of chilling out. You know, so all this big accumulation, bottom line, this is great. Relative strength line, look at it. Just go, 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 go. Hit new highs. Look at it. It was hitting new highs back in 2009 when the index was still in a downtrend. Relative strength line was going up and hitting new highs. And it just looks great now. And on a weekly, you can actually probably the 6th day, of course, I knew it would show better. Look at all the recent accumulation above the 50-day volume average. It's just been consistent. It's been strong. And I don't see any reason for it to stop. What I would like to see, seriously, for us to pull back all the way back to the 50-day moving average. That'd be perfect. Bounce there. Hopefully then move sideways a little bit. Then break out and run to 2,000 to 3,000 to 5,000 maybe? Doubt it. That would be perfect for me. That would then set up the bases that are correct that I need to go long heavy. Right now I'm telling people, you know, if you're very quick swing trading, I'd say I got 20%, I'm out. Oh, go for it. Go ahead and start going heavy now in any play you want. Me, I probably won't be loading up until after we have a setup. And so after this market cools down for a little bit, or I start to get better charts like the one long that I'm adding to today, but that long doesn't have good fundamentals, sadly. I get more and more of charts like that, I'll definitely be looking to go a lot more long. So overall, I just want to make it clear that I'm very bullish on the market still. Even today's go nowhere day on the NYSE on heavy volume. It's kind of disappointing to see it come so far off the highs and close poorly, but it still didn't take out really any of the gains from the day before, so I can't be that bearish on it. And the SP 500 is still in this uptrend that I'm going to draw the lines of right here. So you can see this one. There you go. As long as it stays in between that pattern, you can buy the support, sell the resistance on that if you want. If you're very short term, I'm not that short term. Long term, it looks good, but the NASDAQ obviously looks better. But then when it looks better than the NASDAQ recently, the S&P 600 today had a bad day, but still look at the relative strength line recently since the March lows. It's been very strong. The S&P 400 also had a down day. You see it strong too with the relative strength line. So the best index today by far was the NASDAQ with an up session on higher volume. So everything looks good there. Let's look at this SOX. Show you the SOX, and as you can see, connecting these lines here, the uptrend is intact, and until it breaks that line, there's no reason to even start to even think about getting short this market. I'm going to show you, I guess, the leading indexes. No, I can't do that because I restarted my computer, and I don't want to take the time building everything up. So let me go ahead and pull up the commodities. Platinum Holding on now to the support levels. That could be a very good thing, because that was a pretty ugly sell-off it just went through before the last 2 days. Holding on. Silver had another nasty day today. 200-day moving average is key. Another break below the 200-day moving average. I think that this index is ready to completely roll over, but still not sure yet. Gold has another bullish tail, and gold still has never closed at the low a day since the November rally. Actually, since the September move. Since September, I haven't seen it close at the low of the day. And look at this index since September. Look at all the intra-week reversals and all the open body bars. It's just hard to get bearish on something that looks this bullish long term. I mean, look at that going out to 2007. I mean, look at all these bullish bar patterns. It's just so hard to get not bullish about something like this, knowing what's going on in our economy, with certain people not taking responsibility for the deficit that they created. Very funny. And I see that we finally let Chrysler go bankrupt. Guys, I said to my chat members, or my platinum members and probably gold members also, that GM isn't going to make it. GM will not make it. I said Chrysler will not make it. Did not make it. $4 billion gone. I think another $8 billion to get them through the bankruptcy. I did say one company would make it. Ford. Why do I think they're still going to make it? Look at this chart. So, Ford starts to go up here. General Motors starts to go up. It's actually looking more bullish until the big down day on the 30th where it lost 25%. And as you can see how GM acts during that exact same time, this is how Ford acted. Beautiful. Look at all the accumulation. Look at the green bop. Look at the huge, huge, huge volume with that price pattern and this accumulation. And look at it today. Closed at 598, not at 599, but going all the way out. Zoom 9. It looks like you're closing at the high of the day. Bottom line is, this Zoom 9 is extremely, 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 extremely pretty. It's a very nice chart, and I'm very proud to be a Ford owner. And I just like the way that this Zoom 9 looks. I'm really, 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 really happy about this chart. I think the Zoom 9 looks great. And of course, I know always what I follow, Zoom 4. This is what it looks like on my laptop, like if I was going to be going long, setting up. It's gorgeous. It looks beautiful, beautiful, beautiful off the November lows. I believe Ford's going to make it. Already higher lows, higher highs by doing this. Once again, I can see the trend lines in my own head. Connected there. It's kind of hard for you to see. Maybe on a 2, that'll help right there. Let's go all the way out on it. See it connect the recent highs with the recent lows. And even though the range was expanding, it still broke out above and has now put itself in a new range. Which means is that this bottom line, I would get rid of both of these. Now, I guess the uptrend line I would actually use here, if you're really short term, is I would cut through here. It's almost like a regression line. And I would call this the line you want to hold. The 50-day moving average should get near it, that line, in due time and act as double support for it. But I'm going to draw a regression line kind of right through the support and resistance levels. And that should be close enough to getting where it needs to get. So I'm going to keep an eye on Ford, as I'm definitely loving the max green bop. Definitely loving what it looks like on Zoom 9. Zoom 9 is just beautiful. Congratulations, Ford. That's about all I got to do. So I just wanted everybody just to soak it up on in. Ford isn't that bad at all compared to the rest of them. I'm going to go and wrap it up there. Have a wonderful, wonderful, wonderful day, everybody, on Friday. Have a great weekend. Subscribers, I'm going to come up next with a part 2 that's going to go over our 2 new longs, our 1 ad long, our 1 new short, 1, 2, 3, 4 partial sells, with 2 being for profits, 2 being for small losses, 4 partial covers, with 3 being for profits and 1 being for a small loss. Life's good right now, everybody. Aloha.